Hello, John Griswold here with Griswold Group. I'm excited to fill you in on what's going on with real estate in San Diego. So we are entering August, and believe it or not, it may be that we're peaking with inventory. A little too early to say that definitively, but it's starting to feel that way in the data. So we may start to see the amount of available homes for sale start to decline between now and the end of the year, which happens naturally, but we may be peaking a little earlier than we did in the last couple of years, which is kind of interesting. So demand will also start to fall along with supply, which is honestly hard to believe because demand is so low. But that leads us into some of the questions about our current housing stock and our economy right now, which is, are real estate values going to have a recorrection? Are we going to see plunging home prices in San Diego? In order to have that sort of event, you need three different factors. The first of that is very, very low demand. We do have that, historically low demand, because of how high rates are and how fast values rose from 2020 to 2022. And so that is present in San Diego. We are seeing very, very low demand. The second factor is supply. And although it feels like we have maybe an unhealthy amount of supply, we really don't. We're still actually under what was sort of a more typical market 2017 to 2019 before the pandemic. We actually had slightly more homes on the market then than we do now. And to give you context, since we are always looking back at the Great Recession and hoping it never happens again, we had about 20,000 homes on the market at the height of the Great Recession at the same time, which is incredible. We've got about 6,000 homes on the market right now, which again feels elevated from where we've been. At one point we had like less than 2,000 homes on the market in 2021. So that's the supply side of things. And then the third factor that you would need to have present to really have prices drop considerably is a lot of distressed sales in the market. In June, I think San Diego County had 3 distressed sales for the entire month. We're sitting at under 0.5% of distressed sales when you're looking at what is being sold on a month-to-month basis in San Diego. To give you context, back in the height of the Great Recession, we were north of 50% of homes on the market had some level of distress to them, whether they were in pre-foreclosure or foreclosure or trying to work out a short sale. So we're nowhere near that. We could have distressed sales quadruple and we would still be nowhere near where we were at that time. So based on those 3 factors, we are not headed into any kind of a recorrection. And a lot of that is because sellers have options in this market. There is not an appetite to continue to drop prices if you're not getting sort of fair market value based on what's recently sold. So oftentimes sellers will drop their price once, maybe twice. And at that point, they're looking at other options, including renting it out. A lot of homeowners have properties that cash flow at this point because of when they bought it and because of their interest rate. 40% of San Diego homeowners have no mortgage at all. And of the ones that do have mortgages, the vast majority have interest rates below 4%. So there's just not a lot of interest in a race to the bottom. At a certain point, sellers will pull their homes off the market, and we're seeing that in a big way the last couple of months, where a lot of sellers are saying, you know what, let's just try again next year because I'm just not a fan of where my home is being evaluated in the market. too much competition. Let's just wait and see if as rates drop, that increases demand. And I think that's a likely outcome. We're already seeing cracks in the economy. The recent jobs report came out very underwhelming. We've got some core inflation data coming out this week and next week. There's a lot of eyeballs on the economy right now. And although I do think the Fed is going to pull off this soft landing where we're not going to head into a really significant recession, we are going to probably see enough cracks that they're going to probably do one, if not two, federal funds rate drops before the end of the year, which will have a impact on real estate rates. So we'll see where that happens. Some of that's already being baked in. We're seeing that rates are down from close to 7%. Now we're close to 6.5%. If we can get below 6.5% for duration, that is going to spike demand, and we will have market times drop, and it will become more advantageous for sellers as that occurs. So anyway, I hope this was helpful, and I'll talk to you on the next one.